Here we see some advantages and disadvantages. So, what are some advantages? We see that capital and operating losses, we know the rules about those, carry forwards, carry backs, all that. Well, if you are just one corporation, you can't, if you don't have income to offset by these capital losses and operating losses, well, sorry, you may have to carry forward, carry back, maybe even lose it. But if you can consolidate with a not as profitable subsidiary or something, then you might be able to use those capital losses and operating losses to offset profits, which that's pretty nice. That's very nice. And you've got, let's say, 14, 15, 16 entities within this consolidated group. Yeah, I mean, there's a lot of options there to offset different amounts within all of those different entities. Dividends received within the group are 100% eliminated, thus reducing taxable income. Dealing with the dividends received deduction, right? This here, it's just boom, 100% eliminated, which that's nice. You don't have to pay any tax on that. It's considered just transfers between the entity. Now, what are the disadvantages here? All corporations in the group must have the same tax year. Is that a huge disadvantage? Maybe in the real world, we're not here to talk about that. But yeah, it's a little bit of a complexity and something to deal with. You have to align all the entities together. And another disadvantage, this is the big one, not that it's specific, it's kind of broad. But the regulations governing these consolidated returns are complex and they can be challenging to navigate. Yeah, I mean, if there's one thing to say about this, it's an incredibly complex, time consuming, costly endeavor. Probably hiring an accounting firm to have hundreds, I don't know about hundreds, it depends on the size of the entity, but lots of people working on this, billable hours to get all these tax returns consolidated. Now, to calculate the consolidated tax owed, the group must recalculate any deductions that were limited by AGI, such as capital gains and losses, Section 1231 gains and losses, NOL, charitable contributions deductions, and any dividends received deductions. What this is saying is that you can't just take the finalized tax returns for all the entities and combine them. You need to essentially redo everything, have this big worksheet, redo the entire consolidated return from the beginning, and account for it as if this is all the same entity. Now, additionally, intercompany gains, losses, sales, and dividends must be eliminated in order to avoid double taxation. This is something that's big on the FAR exam. Got some similarities, but that's just kind of why we also recommend not taking the exams of Reg and FAR back to back. You see a lot of the same topics, but different rules because it's tax versus books. Advantages here. So just building on that a little bit more. I mean, again, some of these things we saw, we can offset the gains and losses. We got simplified tax reporting. Now, yeah, it's a lot of work to do it, but once you get the consolidated return, it's much more simple because it's just one return. You've got tax planning opportunities, which is great because you can shift income and expenses around these different groups and you can be more tax efficient, save some money there. You can utilize these NOLs much better and we can deal with credits much better. We have the advantages of allowing our group to combine tax credits and possibly getting more money back and owing less money at the end. Building on the disadvantages as well, as we said, it's complex. There's a lot of issues to deal with. There's navigating complex tax regulations. We've got a lot of more time and effort and resources. Many lives will be lost along the way. I hope not. What about shared tax liability? Well, members of the affiliated group that file a consolidated return share responsibility for the group's tax liability. If one member does fail to meet its obligations, the other members can be held liable for the unpaid taxes. That's a disadvantage, but hopefully you've made the decision properly to understand if this is a good or bad idea. You can also do all the consolidated work papers and see if at the end you would benefit from this or not. You don't have to do it. No one's saying you have to file consolidated returns. Limitations on certain tax benefits. Well, filing a consolidated return may limit the use of certain tax benefits, such as the domestic production activities deduction and foreign tax credits. Now, these are not things you have to fully memorize. It's just kind of an idea why you would or would not do it, giving you a full picture of this whole process. So yeah, it could just limit certain tax benefits. Intercompany transactions. I mean, this is just a lot. I mean, yeah, this could be an advantage is dealing with and eliminating intercompany transactions, but overall the process is going to be costly, time-consuming, and complex. And with more complexity comes room for more possible errors and issues, and with that, possibly more penalties. Lastly, state tax considerations. State tax rules for consolidated returns may vary, and not all states allow consolidated returns. They can create additional complexity for planning and compliance and all this. Again, not something we'll dive into more than just mentioning it, but just know that there's a lot of issues you have to work around. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of cpa.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.